I'm going to share my thoughts about Jerome Powell's speech on March 7th. During the speech, Powell said 5 very important things. I'm going to read you the quotes. The ultimate level of interest rates is likely to be higher than previously anticipated. The historic record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. Earlier this year, some of the improvement was revised away. In addition, we got a very strong reading on inflation in January. Also, very strong jobs reading. Also, very strong retail sales. As I pointed out in my testimony, we are looking at a reversal at what we thought we were seeing, to some extent, a partial reversal. Nothing about the data shows that we have tightened too much. Indeed, it suggests we have a lot more work to do. Powell is looking at the data from inflation reports and has determined that there is a reversal. Inflation is not coming down at the rate it once was. In fact, inflation went up last month according to the PCE inflation report. Powell is set on achieving his 2% inflation target and states that it will take a lot of work to get there. He understands that Americans will lose jobs in the process, but he needs to continue to raise interest rates for the greater good. Powell acknowledges that he has a lot more work to do and that his job is not done yet. This is not good for the stock market. Before Powell spoke, the market consensus was that the Fed would raise interest rates by 0.25% or 25 basis points at the next Fed meeting. Now, the market is pricing in a 0.5% or a 50 basis point hike for the next Fed meeting. The market has placed a probability of around 70% that this will happen. This is exactly what I've been trying to warn you all about. It doesn't take an expert to see the writing on the wall. Inflation is getting harder and harder to fight. It's coming down slower than expected. CPI inflation is getting stuck at over 6%. This is not a good thing. I'm now going to talk about how I think this will affect the stock market. The stock market will take a hit from this. The market believed that the Fed would continue with the 25 basis point rate hikes and that we will have a soft landing, in air quotes. The economy will feel the pain from these rate hikes, especially if the Fed decides to raise interest rates by another 50 basis points at the next meeting. Right now, I'd advise not to panic. I'm not buying or selling any stocks. I'm simply waiting to see how this plays out. I'm waiting for the next inflation report, and I'm waiting for the next Fed meeting. After we get more information and after we see what the stock market does, then I'll put out another video saying exactly what I'm doing. Please tell me what you think in the comments. As always, please like the video and subscribe to the channel.